Good morning, everyone. This is Brad Matheny again. I want to highlight the incredible setup that's taking place right now in the U.S. and foreign markets related to particularly a couple of charts and then what to expect going forward. So number one, the U.S. markets are holding up. That's this blue line here. They're holding up quite well, still above the COVID highs, trying to hammer out some support here, maybe getting into a Christmas rally phase, and may actually prompt a rally, up from current lows down here, maybe prompt a rally back up into this area or up into this area, which would be incredible when you think about the real opportunity here. That's going to be a potential 20 to say 15 to 20, maybe 27% rally going forward from these recent lows, if we get into a Christmas rally and if we start a new move higher. Yet the foreign markets are really trying to find some support down here near these lows, these COVID lows. And ideally, ladies and gentlemen, we're looking at the potential for a pretty solid rally across the foreign markets, possibly even bigger than the U.S. So we could see, if we were to see the foreign markets try to rally about 50% up above this range, you'd be talking a 30, 35, 36% rally. That would be back up to these COVID high areas here. If we were to see a moderate rally just up to the most recent high peaks over here, we'd be looking at a 20 to 24% rally. And if we were to see the markets rally back to these peaks back over here, like the U.S. markets are doing, we'd be looking at a 45 to 50% rally potentially in the foreign markets. Now, how critical is this? I need you to really understand the sense that a rally phase in the U.S. markets could prompt a very solid uptrend, and the rally in the foreign markets, if things settle, could easily prompt a 40 or 45% rally off of these deep, deep lows that are setting up right down here. Now, the next chart I'm going to show you here is the what I call the currency to gold index. And this is a weekly chart, and particularly what I'm looking for here is weakness to settle right across here, which means that the gold will start to rally while the U.S. dollar rolls lower. You can see here the U.S. dollar is already starting to move a bit lower here. When I expect to move lower, let me try to draw this out a little bit. So let me go to the pen. The U.S. dollar weakness is really probably going to roll down to about this 108, 107 level and maybe try to flatten out a little bit. Gold, on the other hand, if the dollar weakens, should rally excessively and try to push to new highs. Whereas the foreign currency to gold index would probably weaken down here and maybe eventually come back down into these lower levels as gold moves a bit higher. So understand that we have a very interesting setup right now where weakening U.S. dollar, strengthening gold, and moderately fluctuating foreign markets may prompt a very, very big move in the markets. Now, one thing we want to pay attention to is this chart. This chart is showing us, and let me go to monthly so you can see it in more detail. This is what I call my consumer engagement chart, and we're seeing that consumers are stagnating right now near these 2014-15 low levels. You can see them back over here in 2017, but we've got a really good potential if this turns around and start to see a Christmas rally to see some sort of an upward move, potentially trying to get above these levels here. And that carries over into this chart, which is my volatility index, custom volatility index, which is continuing to gain strength. Now, this is a weekly chart. It's continuing to gain strength throughout these little bottoming formations. Very little real range here, although we're seeing huge ranges in the major markets, the S&P and the Dow and the NASDAQ. But what we're seeing here is a very, very tight little range setting up here, which leads me to believe that we're going to see a rally phase kind of like this, breaking out maybe up in the 10, 11. And I want you to understand that where it really comes out is here's our COVID lows, We come all the way across to these peak levels before we change direction. Then we come downward to these lows. This I'm counting essentially as an A, B, C downward move. Then we have a what I call a D here, which is really 1, 2, 3, which forms A. Then B up to this level. Then C down to this level. And in theory, we have a 1, 2. So I'm going to draw this again. 1, 2, 3, 4, basing and a rally phase. Wave 5, Christmas rally, starting the next move higher. And that's where we are at with this. And try and get rid of the right one. This is where we're at with this. We really have a 1, 2, 3, 4 formation here, wave 5 rally, Christmas rally, and a wave 5 rally, Christmas rally. If we were to get above this 12 and a quarter level on the custom volatility index, I think we'd be really looking at a move very similar here up into these areas. So if I were to draw this, we'd be looking at something up into this area for the U.S. Set that up as a blue color. And for the foreign market, we would be targeting somewhere around here. Set that up as a red color. And I believe that's really what we're looking at next for a wave 5 rally. U.S. market, U.S. dollar will not really collapse. It'll just move sideways, possibly move down into this 108, 107 level, which will probably strengthen oil a little bit, but oil's going to go down to, in my opinion, $63, $64, $65 before trying to find some support. Gold will continue to rally and attempt to take out these resistance levels right up here, which is going to be very critical for gold. Let me make that a little different color. And that's not very pretty. Let's try that. So gold is going to try to move back up to, get over here and see if I can find the dollar value. Well, it should be about 2020, somewhere around there, before it attempts to break out, and that could be into early next year. And then the foreign markets and foreign currency, if we come back over here to FinViz and take a look at what actually is going on, so you can see the euro US dollar has collapsed. And GBP USD has collapsed. US dollar JPY has shot up considerably. US dollar Canadian dollars has actually rotated downward. So this is US dollar, Canadian dollar. Canadian dollar is getting a lot weaker. US dollar, Swiss franc, dollar's stronger, Swiss franc's weaker. What I'm saying is we're going to revert back to a midpoint. So euro US dollar, maybe back into this area. GBP US dollar, maybe back into these areas right here, these lows. USD JPY, maybe down into the 130 area. US dollar Canadian, possibly into the 130, what would that be? 133, 131 level. There's going to be a reversion, but it's not going to weaken the pressure on foreign markets. Foreign markets are still going to be under extreme pressure, and that's why we could see quite a bit of damage yet to come. So if I were to come back over to, let's go here. This is crude oil moving downward. This is a daily chart. So I will bring this to a weekly, showing you kind of what's going on, and then I will add the SPY, and I will move the SPY off to another template, move to lower pane, change the color, SPY, make it blue. And what I'm showing you here, the SPY could move upward while oil collapses down in this area. And this moves us out to about January. What we would see here is we would see the US dollar rallying. Try this again without that stupid thing in the way. Brush. We could see the US dollar rallying from these levels. Come here, mouse. Up into these levels, potentially attempting a new all-time high in early January, February, March. Remember, very important that Q3 or Q4 and Q1 of 2023 are going to be critically important. So now understand that we have Q4 of 2020 in this area, roughly right to there. And then we have Q1 in this area, carrying us out to April, let's see, end of March, right in this area. And what this is going to be, ladies and gentlemen, these could be very powerful for the U.S. market. If we see a very strong move in the global markets and we see some sort of recovery overall, we could see a very strong reversion of oil back into this $60 area. Let me try to convert these to regular. So if we were to see these revert, as I'm telling you, oil moving back down into this $60, $64, $65 level, near this lower trend line, the U.S. markets could continue to grind higher into a wave 5, while foreign markets will follow us a bit. But remember, the real concern with foreign markets is they are not the U.S. economy. They are not the U.S. dollar, and they are going to struggle to deal with their own debt contagion, their own liabilities, and their own economic weaknesses. So we're going to have a very interesting play going forward, but we could see a really solid bounce in India and in South America and many of the foreign market ETFs. I mean, I'm talking a 25 to 45% bounce or more over the next 4 or 5 months. So get ready for it.